Hi, I'm Phil Grande of philsgang.com. Welcome to my YouTube channel. 85%. Remember that number. 85%. We're 85% there. What does that mean? We're 85% there to a crash. That's right, 85%. We're not 25% before it crashes. We're not 50%. We're at 85% of 100%. We're right there. And I'm going to explain why. First of all, let me go back to my chart 2008, 2013. If I draw a trend line like this, okay, and then you'll notice it broke away. Think of it as a trapdoor dropping. That's very serious. That is a total breakdown in the market. Total. If you notice back here, you see how tight this is? That means the consensus, they're all together. Now, we had a little break here like this. Not bad. Okay? But look at the consensus picked up again. But this is where the danger came in right here. This is it. This is telling you we're there. We're 85% towards a crash. Think of this trapdoor dropping. See these lower lows on the chart? What they're doing now, they're doing everything they possibly can to make sure that where the market is right now, they don't want it to drop down like this and be the fourth and have it be the fourth breakaway or drop. In other words, here you got one here, you got two here, you got three here. They don't want it to be the fourth low. See, the lower lows, they don't want that. This is a mess. It broke apart, okay? You can't fix this. This is worse than Humpty Dumpty falling off the wall. You can't fix this. So what are they doing to try to fix this? Well, they're being a bunch of gangsters. What they're doing is using quantitative easing, using a fancy word, monetization of debt. They're trying to convince us the Federal Reserve are good guys. The Federal Reserve is Robin Hood. The Federal Reserve is going to keep printing and printing and printing money. And first they're going to give money a stimulus so everybody gets a check. Everybody gets $1,200. Everybody gets $600. Businesses get money. Everybody's going to be fine. Federal Reserve are good people. Federal Reserve is Robin Hood. No, they're not. They're reverse Robin Hood, and I'll explain. Let's get back to my 85%, why I think we're there. First of all, if you take a look, and you think about this right now, when they talk about monetization of debt, what does that mean? When the federal government is out of money, it spends more than it makes. It spends more than it takes in. That's how stupid they are. So what happens? We have to print money. So the Federal Reserve the Federal Reserve goes in and says, I will buy from I'll buy from you, Congress, I'll buy from you, the government, your debt, which is treasuries. And I'll shift them from your balance sheet to my balance sheet. This is what they've been doing. Remember in 2008, they only had $450 billion. Now they got $4 trillion. Now they even got worse now. Now they're saying, we're going to save all the companies. Oh, now you're going to save all the companies? So now they're going to the companies and buying their assets, which are mortgage-backed securities, which are treasuries, and they're shifting to their balance sheet. They're even doing very, very wealthy people. Same thing, buying their assets, giving them money. Every time they buy assets, whether it's treasuries or mortgages, whatever they buy, furniture, all they're doing is giving them credit in cash and go on your way again and keep making the same mistakes. And here's what really drives me nuts. Is when they give corporations money to keep them alive and to keep going. All you're doing is making zombie companies. You're taking companies that are totally terrible, that are not running well. And what do? They're propping them up. So getting back to the 85%, they have taken printing all this money, nothing behind it, no gold, nothing, and now they got on their balance sheet $4 trillion. The key is now, how are they ever going to sell it back into the market? They can't sell it back into the market. China tried to sell theirs into the market. And when they try to sell theirs in the market, the people who wanted to buy it at auction wanted such high interest rates, it almost destroyed Japan's economy. They had to stop. Now they're right back to Q8, and they've been doing it for 20 years. They can never get out of their zero interest. We know it's going to be the same thing here. We can't sell those because if we start selling the treasuries, guess what's going to happen? Interest rates on your car is going to go up. Interest rates on your house are going to go from 2.7% to 10%. Interest rates are going to go through the roof. They can't do it. They know they can't. The idea of keeping interest rates low and the idea of keep buying all this debt, okay, and keep buying treasuries to keep interest rates low. So the market keeps going up without profits. But we've reached the point now that they really want to start selling those treasuries. The Federal Reserve says, I got to sell these treasuries. I got to unwind them. But they can't. They never can. They never will be able to. Because the minute they go to sell those treasuries, unwind them, the Federal Reserve, the Chinese, the Saudis, they're all going to want high rates. So we are stuck with this quantitative easing, zero rates forever. Now, what is going to happen? If they can't sell them, what will eventually happen? This is where the 85% comes in. People start figuring it out. They're all saying, wait a minute. When I went to the grocery store 2 months ago with $100, I had 2 bags of groceries. I'm going to the grocery store with the same $100. I only have 1 bag. 1 bag. Then they go to the grocery store again. Instead of they went from 2 bags to 1 bag to a half a bag. It means their dollar doesn't work anymore. And people start panicking. And we're 85% there. The people, just like in 1929, just like in the dot-com crash, just like in the housing crash, believe me, the people finally are figuring out, wait a minute, something's wrong here. What's going on with my dollars? These guys are robbing me. They're robbing me. They're not Robin Hood. They're reverse Robin Hood. They're taking from me, the hardworking guy on Main Street, and giving it to the rich by doing this monetization. And they're all making a fortune in the stock market. Stocks go up, remember. They don't need profits anymore. As long as you keep interest rates at zero, the CEOs keep buying their own shares, keep propping it up. So we're 85% there because at one point, like all the other crashes, they're all going to sit there and go at the same time, just like the housing market. Everybody wakes up one morning and the birds aren't singing anymore, just like what happened to the housing crash, and they all realize I've been screwed by the Federal Reserve. They haven't been helping me. They've made me a debt slave, and now my dollars are worthless. And now they panic, and they don't spend. People get laid off. The next thing happens is the guy's going to work. He sees his neighbor can't get to work. He's going, I thought you were going to work. No, he says, no, I got laid off. Now panic goes in. People stop spending. It's over. So I think we're 85% there because I think people are smart. I think you're very smart. I think you know something's wrong. When you keep printing money out of thin air and your dollar's not getting stretched out, finally you're going to panic. You stop buying. It's over. It's over. As soon as your neighbor doesn't go to work, panic sets in, and that's why we're 85% there before a crash happens. Look, join my gang, philsgang.com. Check it out. It's free for 10 days. You get my color-coded technology chart and my membership. See you on the charts.